I want to start with copper and the signal that this is sending to you, $14,000 a ton.
I think what we're seeing in copper is a market driven a bit more by speculators than fundamentals. So when I see these headlines saying Chinese demand is driving things, I think, well, that's suddenly in the last couple of days, Chinese demand has just spiked for copper. No, I don't think that's the whole story. I think there's a speculation. There's, people are looking for asset classes. They're looking for something to own in an environment of uncertainty, right? So you got to own AI, and maybe this is a derivative of AI. And there's also cost factors.
Because copper goes into data centers.
Right? It's not a big driver.
Yeah.
It's a small piece of it, but it gets a lot of attention, as you can imagine. And then, the concerns about availability of sulfuric acid and about fuel in Peru, for example, the second or third largest producer globally of copper. So I'm not sure that this is totally fundamentally driven. I would be pretty high conviction that we're not going to be much higher than this in a year from now when the copper supply comes back on in several high-profile mines that are offline right now.
What do you guys suppose will be the global economy in a year from now? Do you feel like you are comfortable to make a projection in terms of where things land?
No, I was really trying to talk about the supply side. I was trying to avoid that altogether. But I think the piece the puzzle that's easier for us to forecast is the fact that the Grasberg mine for Freeport is not fully operating, but it should be a year from now, right? And the Panamanian situation could be resolved and could be ramping back up. So that right there is a couple percentage right there of the global markets that could be back online. But as far as the demand side, I think you're going to have a mixed bag. I think that, if we have a prolonged war in the Middle East, you're going to have concerns over, recession or depressed demand in many of the countries that are big consumers of copper, right? So Europe and the Middle East. Sorry, not the Middle East, Europe and Asia. And I think that offsetting that, of course, is some demand strength, but I don't think it's quite as powerful as the market is signaling. I think there's more to the story.
Okay, well, that's one story. There's also the aluminum story right now. And you had a note out earlier this month. You upgraded Alcoa to overweight. Your price target's $70. It's at $67.60 right now, so... Getting there.
Quick.
You said limited global capacity additions, low global inventories, also disruptions with the Iran war. What's the Alcoa story and what's the aluminum story?
I mean, Alcoa's up 27% year to date. Like, it's just fascinating to me, some of these raw materials and how interesting or how interested investors have been in this space.
But if you were to look at Alcoa versus the aluminum price, it's actually decoupled and underperformed the aluminum price. So that's, you could look at how much it's moved year to date. And some investors are saying, earnings have been disappointing. But the fact is you're looking backwards to say that. You're looking at first quarter results before the big squeeze in aluminum, and there's always a lag effect. But the amount of cash generation at these aluminum prices, it's really going to materialize in the second quarter and beyond. And I know we hit a really exciting number in copper, but the Midwest premium today also hit an all-time high. So aluminum actually is probably really undervalued at these prices. And we've seen forecasts that say that it should be at least $4,000 a ton from the recent $3,600.
Yeah.
In fact, the Midwest premium at an all-time high is still too low to attract the necessary amount of material to this country relative to seeing it go to, say, Europe. So I think aluminum is pretty sticky. I feel a lot of conviction that the market is yet to fully experience the shortfall in aluminum. There were several smelters that took direct hits of missiles, right? They're not coming back anytime soon. It's going to be 6 months at earliest with some that were not hit by missiles. Those hit by missiles have to get rebuilt. That will take 12 to 18 months.
I feel like you joined us at Bloomberg Invest early, mid-March, let's say mid-March.
Yeah.
Gosh, was that mid-March?
It was evolving, yeah.
Yeah, and the story was similar, but I think back then a lot of us thought this would be over by May, and it's not.
Right.
How does that change your view on the outlook for these raw materials and for these companies?
It's hard to get information out of the Middle East and exactly what the status of some of these smelters are, but what we are hearing is that, again, they're hit harder than I think the market is demonstrating. If you look at the aluminum price and you look at the shortfall of aluminum before before the Iran war began, we thought that there'd be a shortfall of about 1 million tons and change in a 74 million ton market. Now that number could be at least double and could persist a lot longer than we thought. So there's going to have to be substitution away from aluminum because there will not be enough. And there's already concerns in the market about aluminum availability and switching to other materials. So I think the aluminum squeeze is just in its early days.
How hard is it to get information about the Middle East? You mentioned that, and I'm curious, like what you are hearing. And do you guys have a team on the ground, or what can you share?
No, we do not. We rely on some of the specialists that have a dozen people that just look at aluminum. So we look at those.
But for
forecasts.
all, like in terms of the commodity areas that you play, like I'm just curious, like how difficult it is to get information.
Well, because the Middle East is so much of the aluminum supply, it's 9%. There's an Iranian smelter, for example, and no one knows exactly what the status of it is, but we believe it's probably not running full out. And there's pretty good information on EGA. Qatar, the Qatalum one is, I think, a joint venture with a publicly held company, so that we have okay information. But I think it's hard to get in and make a proper assessment of how long it could take to restart because it's still in a war zone, right?
Yeah, it does feel like, people are underestimating how long. We've talked about it a lot with LNG in terms of Qatar, in terms of its impact. So you just think we're not even done yet. And it's just interesting to have conversations where you're saying, like, if it goes on longer, like we are, every week that goes by.
It's going on longer.
It's going on longer.
But I think irrespective of if the war is over tomorrow, the aluminum situation is going to be tight for a while.
Yeah.
They are bringing in, what we heard is they're bringing in bags of, so there's a couple reasons. There's the ones that were hit directly by the missiles. Then the others that can't get alumina, and there's others that can't get LNG, right? So it's a trifecta or more of problems that are affecting the smelters in the region. So some of them are bringing bagged alumina. I mean, this used to come in ships. It's powder. Bring bagged alumina across the desert in order to kind of keep hobbling along at these smelters.
Wow.
So it's not ideal, but they're just trying to keep the semblance of operations that they can. So I don't know if there'll be a whole lot more hit, but I think that the perception of ability to restart at any quick pace is completely wrong.
I promised we'd go around the world and around the periodic table also. So let's talk a little bit about steel.
Okay.
And what you're seeing as far as U.S. demand, U.S. supply. You argue it's too soon to call the top.
Yeah, so we do a lot of channel checks in steel, and our latest are suggesting that demand is decent, especially if you're in data centers, border fence, and utilities. Those are the big three we hear about, but also there's little pockets of demand on wind towers are really strong. Border fence, yeah.
So
made by tubular rectangular steel.
That's not totally on my radar.
So being built in demand.
That's what we hear. Yeah. So there's so that's a big sucking sound out of part of the southern steel mills that make those products, and then wind farms and also bridge work is really active. So there's little pockets, but broadly speaking, construction isn't great, auto isn't great. Energy isn't exploding by any stretch. But
wind farms in the U.S.?
Yeah, land-based wind farms, because they can start up really quickly. So if you need, if you're waiting for a turbine, you're going to be waiting for years in front of these generators, right? But if you have wind farms, I guess some of these wind power
if you're waiting for a gas turbine, for
correct?
example. Yeah. Which there is a big waiting list.
Correct, but I guess the wind capacity can start up within 9 months, so that's seeing the proliferation of demand. So there's these little pockets of demand, but overall not great. The bigger dynamic here is that imports have fallen because of 50% tariffs, so the domestic mills are taking share from imports. Utilization hit a 4-year high, almost 4-year high last week at 81.4% in the U.S. And that was really Trump's design, from what I read, that he wanted to see U.S. utilization improve so that more steel is being made in the U.S. So overall, demand's pretty okay, and mills are running pretty hard, and they're raising prices every week on the flat rolled and plate side. Even rebar. I think we got a little more ways to go before any risk. And even then, it's tough to justify importing steel when you've got high freight costs, interest costs to store it, et cetera.
Timna, just got about a minute left here. How much of any of these supply chains can really dramatically change anytime in the near future? I just think about the war, COVID, like it does feel like there's a global rethink about making sure that your national supply chains are secure. Any of this that we've talked about, be it copper, aluminum, steel, I mean, these are things that we don't see necessarily a lot in the U.S. anymore. How quickly can any of this change, or will it change, in your view?
Well, it's not practical for every country to build their own aluminum smelter. So in the past, we as a country thought it was okay to have a good portion of aluminum capacity supplied by Canada. They're across the border.
Right.
I guess we don't think that anymore. That's not sufficient.
Right.
So, the things could change in terms of our thinking about politics and borders. But other than that, it's not practical to have every country have a silo of its own operations, but we're going more in that direction for sure.
Yeah, I always think about that. Isn't that going to raise prices on everything?
It would ultimately
so?
create a lot more supply, and prices would go down if borders were ever to reopen in a big way.